From increasing worker remittances to a surge in tourist arrivals, we bring you the latest economic updates for the month of August 2023. Hi, I'm Vinodini Rajpupati and welcome back to the First Capital Monthly Economic Watch. The Central Bank of Sri Lanka has decided to maintain the standing deposit facility rate and the standing lending facility rate unchanged at their current levels of 11% and 12% respectively. They arrived at this decision after a comprehensive analysis of the current economic landscape, considering the significant easing of monetary conditions since June 2023. The board anticipates a rapid decline in overall market lending interest rates in response to recent monetary policy adjustments. Therefore, they have decided to implement targeted administrative measures to reduce specific lending interest rates that are deemed to be excessive and direct licensed banks to reduce overall rupee lending interest rates by an appropriate margin by 31st October 2023. Moving on to the government securities side, the secondary market opened the month with a bullish sentiment and thereafter displayed lackluster sentiment following CBSL's decision to maintain policy rates at their current levels. Accordingly, yields increased marginally across the board during the month, while predominant interest was enticed on short tenors, which declined by over 70 basis points. During the month, CBSL conducted a bond auction and closed at a higher weighted average yield relative to the market rates. However, towards the end of the month, the secondary market exhibited restrained activity as participants took the sidelines, awaiting for a clearer market direction due to the surge in bills and the CBSL's directive urging LCBs to curtail their lending rates, which created some uncertainty in the market. In line with this, finance sector rates, including the AWPR, decreased further and recorded at 15.59% towards the end of the month of August, while interest rate spread declined to 1.4%. Moreover, private sector credit increased by LKR 13.3 billion compared to June 2023 amidst the dip in rates. Meanwhile, state credit significantly increased by LKR 289.5 billion relative to June 2023. On a year-on-year basis, private credit recorded a decrease of -7.6%, and on a month-on-month basis, it is an increase of 0.2%. Looking at the inflation figures for the month of August, as expected, inflation continued to display a declining trend for the 11th consecutive month to 4% year-on-year, while month-on-month inflation declined by 0.1%. Year-on-year inflation of food group decreased to -4.8% in August 2023 from -1.4% in July 2023, while non-food group decreased to 8.7% in August 2023 from 10.5% in July 2023. Analyzing the month-on-month inflation, the CCPI index declined by 0.1% month-on-month, contributed by the decrease in expenditure of food items by 0.41% and an increase in expenditure of non-food items by 0.39%. Within the food items, decrease in value changes were mainly reported for fresh fish, vegetables, green chilies, milk powder, and eggs. Among non-food groups, increase in value changes were mainly reported in transport and housing, water, electricity, gas, and other fuels. Looking at the NCPI for July 2023, NCPI significantly contracted to 4.6% year-on-year compared to 10.8% in June 2023. Meanwhile, foreign reserves reduced by USD 167 million from July 2023 to USD 3.6 billion in August 2023. Also, market liquidity displayed volatility and turned negative during the month of August 2023. In terms of the government securities, there were LKR 1,282.2 billion worth of maturities during August 2023 and new issues through auctions worth of LKR 783.1 billion, creating a deficit of LKR 499 billion. Also, CBSL holdings continued to decline and ended the month of August below LKR 2,600 billion. Moving on to the external sector performance, trade deficit amounted to USD 368 million in July 2023, compared to a deficit of USD 123 million recorded in July 2022. In terms of exports, earnings from exports declined by 12.4% year-on-year in July 2023 to USD 1,020.4 million, mainly due to a decline in earnings from industrial exports, including garments, associated with slowing external demand, while there was an increase in export earnings of petroleum products due to the increase in both prices and volumes of bunker and aviation fuel exports. In terms of imports, import expenditure increased by 7.8% year-on-year to USD 1,387.6 million in July 2023 as import expenditure of consumer goods and investment goods increased amidst the decline in import expenditure on intermediate goods. Workers' remittances increased to USD 541 million in July 2023, increasing by 93.9% year-on-year. Earnings from tourism for July 2023 increased to USD 219 million from USD 85 million in July 2022. Accordingly, BOP for January to July 2023 recorded at USD 2,078 million compared to January to June 2023 amount of USD 1,958 million, resulting in a net inflow of USD 120 million for the month of July 2023. In terms of tourist arrivals, the total arrivals for the month was recorded at 136,405, displaying an increase of 261.2% compared to August 2022, owing to factors such as the ongoing recovery of the tourism sector, improved socio-economic conditions, improvements in air connectivity followed by China's recent reopening, and the strong pent-up demand for travel following pandemic-related restrictions. The largest source market for tourist arrivals in August were India, the United Kingdom, China, Germany, and Russian Federation. In terms of the currency movement, LKR appreciated against USD both on a month-on-month and year-to-date basis, reaching LKR 322.7 by the end of the month, while strengthening against several major currencies including the USD, UK pound and the euro. Finally, moving on to the global market, a negative sentiment persisted as most major indices were seen in the red zone during the month. So with that, we conclude the monthly recap for August 2023 and stay tuned for more updates in the future. Thank you.